Welcome to Markets Now. I'm Michelle Rook with Brian Doherty of Total Farm Marketing, and we're closing mostly higher here on Friday in grain and livestock futures and outside markets. And Brian, quite a week here. We're going to have higher weekly closes pretty much in all the commodities except for the live cattle futures. Talk about why we were able to kind of push off the China news and the escalation of the trade war. Is the worst of the tariff news kind of factored in here now, do you think?
It looks like it. So there's so many moving parts this week, but let's start with what you ended with. It looks like the worst of the tariff news is behind the market. We've seen a lot of buying in commodities, but also equities. The worst seem to be behind the market early to midweek, and then some really positive and active activity on Friday. We saw another week of good export sales with corn. Remember, we saw the USDA increase exports for corn. So again, good usage there. You've got some weather uncertainty in the Midwest to get to kind of kick off the planting season. There will be good fieldwork progress in areas, but not in other areas. So you had all of that, but some really impressive closes. You look at something like May corn up 30 cents. December corn, 16, over 16 for the week. Soybeans, 60 cents. November up over 30. The 60 cents was in the old crop. Some really aggressive buying there. I think it's just a combination of a lot of things, including money, which was going short commodities, likely reversing at the start of a new quarter and going long.
Why do you think we were able to shrug off the China trade war escalation?
Well, there's a lot of theory on that, and I'll give you my 2 cents worth. And one is it doesn't matter right now. China's not buying corn right now. They're buying soybeans from US. There's time for these escalations to de-escalate, deals to be made. I think the market's thinking bigger picture, and what's happening worldwide with other countries coming to the US, that China's in a pickle, and China might have to be the first to blink here, and so they're playing hardball. Uh, but there again, the art of the deal, right? You're trying to work things out. I think the market might have confidence that ultimately China does come to the table, and there's some negotiations that be made. That's the only thing I can read into the China why the market shrugs it off, anyways. But big picture, you look at all these other countries that are coming to the table. It really gives, from one perspective, a real boost of confidence, and the market voted that way.
How much was the lower dollar index a factor here? Because it's down like almost 3% for the week.
Well, that helps negate any tariff activity, right? When you look at it down for the week, but when you look at the dollar hit its lowest point in 2 years, and it has plunged quite hard. When you look at the index and say, well, what's an index? What's a number? And so the number was over 109, close to 110 in January, and pushed under 100 earlier, or pushed under 100 recently. So that's a big percentage change. You're talking about a 10% change. Well, a lot of the tariffs are 10% universal tariffs. So to me, it's a wash. I
Yeah.
think the marketplace still looks at corn, looks at beans. Anything under 450 in corn, it's tough to see farmers selling. Anything under $10 in beans, tough to find farmers who are willing to sell. And the market can't break under those. So buyers wasted little time jumping in and getting on board.
So, Brian, as we start off a new week, how do we build on this? Does the market need to see maybe trade deals or more trade deals being formed or finalized?
That's a great question, and that's what it needs to see progress, right? If there's any derailment, things are going to get soft again, or people are going to fold their wings in. Traders, in particular, buyers, sellers, in the actual commodity, they don't like uncertainty. They can't kind of, let's say, corral. And if you're not sure, that's what will derail the marketplace. But right now, it looks like things are momentum wise carrying forward, and the administration's looking to cut deals, make deals, and work toward their ultimate goal of what they would view as a more fair world marketplace. Um, there's other elements though that are coming into play. The money flow, and the money flow often is the vote. And the vote last week, the vote the week ahead might be all about jumping into the long-term, low-valued commodity market and owning things that are real value and that are used. And and eaten or burned. And all of that went on sale here in the last couple of months, in
True.
particular into the latter part of March, and the market scooped up that value.
And if we look at the fund positions in the grains, with the exception of corn, they're short in just about everything else. So there's room for them to go long in this market, isn't there?
Well, look what happened in February, right? The funds were very, very long a lot of commodities, and when they pulled out, the market had a pretty swift and hard drop. Now they're not into that point. The only time you see the funds, let's say in the corn market, really go defensive or go short is when there's a high level of confidence that the crop is on its way. And we're not at that time of year. So all of the uncertainty with producing the crops lie ahead, and they've shed enough positions where there's plenty of room that if there's any weather uncertainty, hiccups in production, the market will sense very quickly that I think the funds want to come back in and own. This goes back to the last couple of years. You've got the dollar trading at 2 year low levels. You've got some question, at least in my mind, as to the crop in 23, 24 for corn. Was it overrated? And now you've got carry out under 1.5 billion bushels in corn. End users are recognizing this is a pretty cheap price. And I think the money flow is recognizing this is a pretty cheap price for corn as you move into the uncertainty of the growing season. Might be a good price by fall, but it's not really a very attractive price. And farmers selling just dried up to zero at the end of March in both old and new crop corn, beans, and wheat.
Yeah. So do you think we're going to see $5 corn, and is it possible to get back above 11 on these beans?
Well, the board is knocking on $5, and in theory, with a tighter supply picture than we had in February, or the marketplace dealt with in February, we could certainly do that again. The momentum is carrying the market there. Farmers are going to get very sidetracked into the fields and not really. Even if they want to deliver short term, may not. So it does look really likely the way the market is trending that we move back over $5. We hit some big hurdles, pushed right through them this week. Very impressive technical picture, moving through a lot of critical moving averages and really uncovering, I think, buy stops, but more so you're just buying. I think you're seeing people come in and buy this and go, you know what? We've been down long enough. This is a market that has potential to really make a move. If anything less than ideal weather, because you come out of the USDA outlook forums and you come up with these record yield forecasts. And that's a big number to start with. And we're not off to the best of springs, at least through the first couple of weeks of April.
When we look specifically at live cattle, we ended lower for the week. We had some lower cash trade, but that market's been hinged to the stock market. If we keep recovering there, does that keep the funds in that long position they're in?
Yeah, I think you got two things going on in the cattle market. One is you've still got really, really high cash cattle prices, and you've got really good demand at high prices. And so the question is, can that hold? And then you look for what I call swing votes, and that's something to tell the market which way to vote, which way to trend. And the swing vote in the cattle complex is what's going on in the stock market. And as the stock market moves, then the traders move. And there's probably some truth to the idea that when stock market gets shook as hard as it did, that even the people that are well vested and well off in life, they're still maybe going to pause on how much they're going to spend on high priced beef. But suffice it to say, I think this cattle market is just well supported on the supply side. We've seen report after report confirm that. Cash activity confirms that there's no sign that I can see that this market is about ready to capitulate. You got the grilling season ahead. I think the cattle market's in healthy shape, taking its cue from outside markets.
You bet. So the milk market actually handled the trade news pretty well. We had a slightly higher weekly close, but you're just above $17. Do you think that market is going to get some momentum here?
I think that the milk market is struggling to get momentum because it can't find it. On the one hand, we're just not seeing the production numbers shave off enough to give the market confidence. On the other hand, there's this concern that that all the product values just aren't finding demand at these lower levels. And I have to remind myself, and even my customers, I have to remind them that the market doesn't move in our timetable. But I will tell you this: I'm a strong advocate of the opinion that cattle or dairy product values butter, whey, cheeses, they're all on sale. They're at good prices. They're at market clearing prices. And we just haven't seen that catalyst to come in and scoop those up. So I think it was a big victory for the market with all this tariff talk that things didn't go south. On the
Yeah,
other hand, they didn't recover and rebound. But I think we just have to be patient with that. I'm not a super bull, but I think I'm friendly enough on the demand side now that prices will likely start to recover. Things like CPI numbers, all of that looks healthy. I just have to remind myself to be patient as the end user or the plants may be comfortable buying as needed. But when one or two jump, there's going to be a pretty fast recovery.
appreciate that analysis. As always, Brian Doherty with Total Farm Marketing. That is Markets Now.